Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 116. Today is January 19th. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Good morning, Sip. How you doing?
I'm doing great, and I feel like the U.S. economy, the markets, everybody's doing great. I looked at the screen this morning, and we're setting ourselves up for new highs. What are your thoughts?
My thoughts are as I'm looking a little bit more at the consolidation pattern that's forming. So I taken a look at this consolidation pattern right here, and despite wrestling with that overhead resistance at 4,800, which is very heavy, so we're bumping up against it. But it'll be a challenge to get above it, especially with this consolidation pattern that we've been seeing.
And so, are we looking at a catalyst of some sort? I know we had a little bit of economic news this week, retail sales. What's leading us to feel more positive, do you think?
Well, okay, so retail sales was very strong, and then we had industrial production that was flat, basically, no growth there. We had housing starts, so housing is going to be a big deal for 2024. I feel like because housing is just really expensive because for years we didn't increase our supply, and yet there's been a lot of demand. Housing starts were, just where we expected. However, permits for the second month in a row are really heavier than expected. So the folks out there are starting the process, and I think there's going to be big business in building new homes, like for the next, say, 5 to 10 years. So that's kind of a long-term play. And we're starting to see that ball rolling to meet up with the demand. The Fed has been extra hawkish, and the Fed has been basically telling us that, hey, don't get too excited about us lowering rates. And so if we take a quick look, Sip, at, where rates are expected to be, I'm going to pull that up right now. This is the CME Fed Watch tool that anybody can access on the web. You can see here in January, nobody expects them to do anything, and they haven't, right? They haven't expected them to do anything. But in March, we were very much expecting a drop in rates. And as you can see, that number is getting less and less and less, and more people are thinking they're going to do nothing. And so getting a rate drop in March, that's kind of starting to look like that's not going to happen. And then finally, we expected a rate drop or 2 rate drops to have happened by May. And now, again, that number is coming up to be more like 1 rate drop, or even this number, which was just about 0 a couple weeks ago, is going up, which says by May, we may not even see a rate hike or a rate drop. And so that's been putting a little bit of, early in the week, late last week, that was a little bit of a tamper on the markets. I think when you see a consolidation pattern like this, I'll kind of zoom in there. When you see this kind of consolidation pattern, what it typically means is that folks are confused. They don't know, whether to be excited or whether to be down. And I was talking to my program participants yesterday at our weekly workshop, and I was helping them understand what this is like. And I was making the analogy to my toddler, right? If I ask my toddler to sit still and give her very little information about what's coming next, in the beginning, it'll be like, yeah, okay, I'll sit still for a couple minutes. But the longer I ask her to sit still without telling her what's going to happen next, she starts to get antsy, right? She starts to get confused. She starts to wonder what's going on. And any sort of hint, whether it be positive or negative, not in my view, but for her. So, like if I say, we're going to go upstairs to your room, for me, that would be like a positive. For her, that might make her think she's going in for a nap. Whatever it would be, she's going to have a reaction to it that may be way more intense than if I told her like a minute after making her sit still. In other words, the longer I make her wait for any sort of solid information about whether her life is going to be positive or negative, the more the reaction is going to be intense. So when you see consolidation patterns like this, generally what you start to think of is that the market is confused, and that almost, with really a lot of confidence, going sideways is not where we're going to be. What's going to more likely happen is that the market will break out down or break out up. Now, whether it's up or down, it usually is a crapshoot. That's a very speculative decision. We don't know how the market is going to interpret the next piece of information. We just can build a solid case that more than likely, when we see this consolidation, that the market won't continue going sideways. It's either going to go down or it's going to go up. Now, the question mark of the magnitude of how much it breaks out down or up is often a function of how much you make the market wait in this confused, consolidated state, right? The longer you make it wait, the more it's going to break out down or up, the bigger the break. And finally, the last tidbit of this type of price pattern, SIP, is that the longer you make it wait, the smaller the tidbit of news that investors can latch onto will trigger that breakout, right? Whereas in the beginning, it might be a little like, it might have to be something big that would cause a breakout. If you make people wait a long time, it could be as something as little as like a little bit of rumor, and boom, you get a whole bunch of people jumping on board, buying or selling. So I'm almost setting myself up for these implied volatility plays. Now, right now, if we take a look at the VIX, you see that the VIX is ever so slightly starting to come off of its lows. And it's not even, coming up to this mean yet, but it is coming off of its lows. I'm going to be watching the VIX carefully, because if I start to see it spike, that means not only are people getting afraid to buy or sell in the main market, but they're starting to load up on insurance, on hedges in the form of options. And if I see that spike, man, I'm going to be ready to capitalize on implied volatility rushes and crushes.
All right. Well, implied volatility is one of those options trading strategies that's in your tool
Yep.
belt. And so, with that being said, I'm going to go ahead and give everyone, anybody new watching, listening, that hasn't checked out AJ's daily workshop. It's a wonderful source to learn some of these introductory, maybe a few of the more sophisticated option strategies if you're not using options in your portfolio. I've gone ahead and thrown the link to that in the chat. I do want to get back to the chart real quick and ask a follow-up question. So you mentioned time a couple of different ways in your explanation. Is that one of those components of options that makes it a little bit more appealing and wise to start using those tools when we know that we're looking at the chart and we have time at our disposal, right? Because that's kind of what you're asserting, is that we don't know what's going to happen up or down, but something is going to happen.
Yeah. So a lot of people, especially newbies to options, they look at options as kind of a way to leverage stock or ETF or index price movements, right? And that's kind of a beginner approach to options, right? Because yes, they're definitely option prices are influenced by the underlying symbol price. But options are also influenced, like you hinted at time going by, because options are labeled a wasting asset. They have an expiration date. And so as they get closer to their expiration date, their extrinsic value, I like to call it premium, some people call it time value, goes to zero. And finally, you also hinted at that implied volatility, which is a really hard topic for people to get their head around. But options, implied volatility, you can kind of think of it as anxiety, whether your anxiety is up or down, right? Implied volatility is investors kind of guessing at what the future is going to be, whether it's going to be tumultuous or whether it's going to be predictable. Whether you have fear about what's going to come next or whether you've got confidence about what's going to come next. And option prices are influenced by that fear and that confidence scale as well. So as option traders, as we get more into the elegant kind of way of using options to always give us profits, we don't always just think about leveraging the underlying symbol price, because a lot of times speculating at which direction the stock is going to go, I mean, you might as well be playing the slots in Vegas, right? So instead, we could play some of the more predictable variables, which is time passing by, or even if we can see that there is anxiety and fear coming into the market, like in the case when we identify a consolidation pattern as we see now, or when we know that all of a sudden there's a breath of fresh air and some confidence that's building in the market, we can also play that. Options allow us to open the door to making profit on all sorts of different movements in the markets, not just stock, ETF, and index price movements.
All right. And we're going to go through a couple examples here in a few minutes, a few moments. I do want to let everyone watching know that we're live. So if you have something that you're looking at, if you have a question about a specific position, market, asset class, feel free to throw it in the chat. And if we have a chance, we'll go ahead and run through it. However, we are a little light today. We don't necessarily have anything that's in the news right now, right? It's one of those where the market's just itching up, and we'll see what the breakout is. Maybe next week, maybe the week after. But it seems as if January is optimistic. We're continuing on from where we left in Q4, essentially.
I mean, we will see. Again, looking at the technicals, and if I zoom in here one more time, Sip, before we get off the topic, I mean, it's optimistic in the short term, but it's more labeled in my mind with confusion and a little bit of uncertainty. Like when we had this move down between December 28th and January 4th, that move down, we would have really liked if we were going to build some confidence in kind of an uptrend, an upcoming uptrend. We would have liked that pullback, or we call that a range contraction move. We would have really liked that to come a little bit further down so that investors could really start accumulating after a little bit of a distribution movement. And it really didn't, right? It came down for a few moments there. And we keep seeing that little bit of pullback and then some move up. And the moves up seem to get stopped at that 4,800 on the S&P 500, which is where we know there's a lot of selling that occurs at that price. People are taking profit at that price. So I'm not sure I'm going to jump on the bull bandwagon yet for past, even the second half of January that we're just now starting. But yeah, I think what I can predictably look at the market and say is that investors are confused about what's going to happen next.
All right. Well, we're going to be trying to decipher that with some of the tools that we have, some of the names that have come up in the community discussions this week. A lot of very smart members that are looking at names, and we'll go ahead and bring it up. So we'll take a short break here. We do have some names to run through, so we'll be back in a few moments, and we'll dig into specifics of how to take advantage of these markets using options. So sit tight, everyone.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So where should we begin? Your pick of the week, or actually,
let's do it.
Actually, we got a user question that maybe we should run through before we dig into the agenda.
Sure.
And this is Mari with SLV. I believe that's the silver ETF.
So very cool. So I have switched during the commercial break. I switched our indicator, and so I like to review that with everybody really quick. This is that confirming indicator that if you go to my website and you sign up for free access to our web portal, you'll get access to some of the white papers I've written, some of the tools we've created, like how to analyze options and all that, and a couple of indicators that you can install into your Thinkorswim platform. And so the indicator that I'm talking about now is, we call it our confirming retracement indicator. And it helps us. It was originally designed to help us look at the broad market. But what we're seeing is that this is a great end of day indicator. And so I'm going to give you the settings of this. So again, this is our retracement confirming indicator that you can download for free if you get free access to my web portal. And we have it set up. Let's see here. That's not the one I want to do. I want to do this one right here. Yep. Come on over here. Boop. Come over here. Yep. It's set up as the MACD, but instead of using closing price to calculate the values of this indicator, I'm using volume weighted average price. So you set your price to VWAP, volume weighted average price, or VWAP. My fast length is 6, and it's an exponential type. My slow length is 19. That's also an exponential type. And my MACD length is 3, also an exponential type. And finally, when my 1 bar reversal filter is off. Once you've got that set up, you can see that we've got some really good and quite on the ball type indicators to tell us when we've hit tops and bottoms. So when I look at SLV, my most recent signal was that a top was found, right? But these are end of day signals. So in my trading world, what I do is, I'm not there during the trading session. I usually come in the evening after the markets are closed, when I have a moment to kind of have a level head, when to be able to take a breather. And I'll look to see what of these end of day signals. So we got an end of day signal on January 12th that said, hey, we're at a bottom. So I would actually set up my automatic trading software in order to, look the next day to make sure we have follow through. And for those of you out there, that here are the kind of rules for follow through on the day of trading that I program into my automatic trader. You might want to write these down. Number 1, I make sure I don't trade in the morning session. I always trade in the afternoon session. That's about 1 o'clock in the afternoon, New York City time on, right? So not before then. And then I have my automatic trader, first of all, make sure I'm trading on the correct side of yesterday's close. So if I'm looking for a bottom, I'm going to make sure that I'm trading above yesterday's close. If I'm looking at a top and I think that there's a top, I'm going to make sure I'm trading below yesterday's close. So in this case, we were looking for a bottom. We wanted to make sure we were trading above yesterday's close. I'll also look at the day's open range established in the first half hour of trading, and I'll make sure I'm trading above today's open range. So yesterday's close, today's open range, and a new one that I've added is that I want to be trading above the end of day close, the end of day signal day close. So in this case, it would have been whatever I closed at on January 12th. So I make sure that those three criteria at a minimum are being met. And then whatever price target I've set in my trade plan, that's met as well. And you could throw in other things too. Make sure RSI is going your way. Make sure accumulation distribution with respect to volumes going your way. Make sure on-balance volumes going your way. Those are all little added verifiers, and you could program those also into your conditional automatic trading rules. And not even, you could take my best practices and not even be in front of the computer. Let your computer make those unemotional decisions. So if I look back, I can tell you for sure on the following day after getting that signal, Mari, I did not get follow through. So I would have come back at the end of this trading day and saw that my automatic trading platform did not try to place any trades because I didn't get follow through to the end of day signal that I got the day prior. So I would make a decision at the end of January 16th, should I try again? And I probably would. There would be no reason not to. So indeed, I would try again on January 17th, set up my automatic traders the evening of the 16th, let it run on January 17th. And you don't have to use automatic traders if you're in front of the computer, but just be very disciplined. Don't get caught up in your emotions and place the trade if you don't have all those check boxes checked off for follow through. I can tell you for sure that you didn't get follow through on January 17th, just looking at this daily bar. You weren't above the previous day close. You weren't above the close of the signal day, and you weren't above the day's open range because you wound up closing down. So you didn't get follow through that second day. And then you'd ask yourself in that evening, should I try again the third day? And the reason why I wouldn't have tried again on that third day is because I got an end of day signal kind of reversing the signal I got 2 days earlier. As you can see here, you got this magenta arrow that's basically saying, psycha boo boo, that signal that I gave you 2 days ago that you never got follow through on, I'm taking it back, right? I'm reversing it. So where we are right now, Mari, is we're just waiting for another bottom end of day signal. And so again, being very black and white, following our signals, following our trade plan, we're just checking in every evening for the next cyan signal, the next fast MACD crossing of the 3 above the 5. And again, I like to use VWAP to calculate that. And once I get that end of day signal, the next trading day, I'll try to look for that follow through again. But it's the combination of my end of day signal and the next day or subsequent day follow through that I want to see before I place it. Now, when I do get that combination of end of day signal and next day follow through, I'm going to want to probably buy some SLV shares, or I could buy a substitute back month deep in the money, far out in time call option. Those would be two things that I'd want to do here when I found that bottom, especially if I find that bottom somewhere above probably this $20.25, $20.50. If it starts to get too low, like in the below $20 range, I'd question, am I still in my sideways pattern, right?
Yeah, and
So
well, I was just gonna say, and metals backed by a commodity can have some volatility, right?
Mhm.
There could be something that comes up that could move it, but it definitely has a nice range. So,
It does, and I'd be looking for that buy signal, Mari, but I wouldn't shoot until I see the whites of their eyes. You know what I mean?
all right, cool. Well, let's get into some things that you are seeing some potential opportunities on, and we'll go ahead and start with your pick of the week, which is Unity Software, ticker symbol U. I believe this is a new one for us.
Yeah, I'm looking at this guy. So this software, this is a company, and they're focusing on things like augmented reality, virtual reality, looking at 2D, 3D stuff to help, not just be like for gaming, which is industry all in itself, but to like help us like be able to have us look through our glasses or look through our window, and as we're looking at the snow falling, as I'm doing right now out of my office here on the East Coast, you'd have a full-on 3D picture of what the weather's going to be, information provided, or they're working on those type of solutions. They're not usually the type of company I'm interested in. You can see that they haven't quite, found their place in the world in order to be making some money or anything like that. Their earnings tend to always be a little bit on the negative side. It could be worse. There's company out there that are throwing money out the window, but Unity Software hasn't quite figured out how to turn a profit yet. They're not giving dividends to their investors, but it does look like they're here to stay. They've got a lot of big backers. So then once I've got my fundamentals check and I feel comfortable that the stock is going to be there, I kind of look at the pattern and I see that Unity Software found some support or found some resistance at $40 as it did before. And I'm curious, I'm going to be watching this to see if it tests support around the $25, $26 zone. And in preparation for that, the reason why I wanted to feature it this week is where it is right now in the 32. It's about halfway from where the highs and where I predict the lows will be. This is the perfect place to plan a premium selling trade. When I say plan it, I mean create the trade plan. We can base our trade plan based on 26 being support, 40, 42 resistance, and we can basically determine where the worst case scenario for premium selling would be. That would be to do a buy right here at the $32 mark. Determine what is the biggest loss we could do with that worst case scenario trade. Size our position accordingly. And then in addition, create price targets that we would need to meet or beat in order to not get that worst case scenario when we leg into the position. And that would prepare me for when I do detect a bottom to be able to start buying some of this stock. And I actually looked at the substitute back month options on Unity, and I didn't like them. So I would more than likely be buying some Unity stock, buying them in lots of 100 because option shares are bulked together in contracts, which are lots of 100. So you got to do everything in lots of 100. So I would buy 100 or, increments of 100 shares of stock in preparation for in the future selling premium against it, selling call premium against it. So the reason why I'm featuring this is it has a lot of potential for the future, and this is the time to be using like our end of day prices to sit down and plan out your trade, come up with your price targets, come up with your position sizing, and be all ready for your next bottom signal.
All right. Unity Software and the AI play. Potentially a nice little pullback in, maybe by the end of the year, the reversal as technology and more adaptation of AI software. I know that Apple's coming out with their version of the AI goggles in the next coming months.
Mm-hmm.
So, I mean, that's just the future of where we are going with things, right, AJ?
Yep.
Maybe one day we'll do a VR podcast or something. I don't know.
Wouldn't that be cool?
I don't think it's too difficult either. All right. Moving into our speed round, we've got some interesting names on board that we're going to run through, get some feedback, see if there's some opportunity. We're going to head down southwest to Santa Fe, New Mexico.
Oh.
This is Chris, interested in Intel, ticker symbol INTC. A boring company, a boring name. What do you say?
Well, they had a little run up, didn't they, Chris? They had a run up from about end of October to the beginning of this year. Chris, I'm thinking that we're coming up to an earnings, right? I see an earnings coming up. Let me see exactly what date that's going to be. If I put my cursor on this guy, January 25th, so next week, right? And it's going to be after market closes. And I see a little bit of consolidation. So investors in Intel are curious what earnings is going to do. So I'm actually going to describe for you a potential earnings play. What we want to do in order to profit on this is we want to come up with this assumption that there's going to be some fear leading up into the actual earnings, which is after the market closes on January 25. And then as soon as they release their earnings and it's no longer uncertain where the company's going, people will probably regain confidence. And so here's how we play that. I think we're going to be thinking about a calendar spread. So this is where we're going to go probably 6 months out in time with our back month option. And we're going to go, I would even use 2 weeks. I would use weekly options for my front month option. And if you look through Intel and have any sort of bias about what direction you think investors will take once earnings is released, I would err to the side of having my strike prices of my calendar spread in that direction. If you don't have a bias, then just stick with where prices are right then. And I want you to place this calendar spread. And if you don't have trust in what I'm talking about, paper trade it this time around, and then you'll build confidence in this strategy. But what we're talking about is placing this trade literally on the day of the 25th, because we know that after market closes when they report earnings. So go ahead and do your calendar spread. Back month option, 6 months out. Front month option, 2 weeks out. And then on the day after, on the 26th, or even at the latest, the 27th, go ahead and liquidate that position. And what you'll do is you'll wind up taking advantage of that fear turning into confidence. It's a neat thing. And for anybody who wants to see this happen, paper trade that thing, and we'll come back. I'm going to write it down. Sip, let's come back and see how it turns out next Friday.
And what do we call that? What do we call that strategy?
A calendar spread or horizontal spread.
And you're saying it has benefits when we're leading up to earnings calls?
Yeah, because leading up to an earnings call or any event that folks are uncertain what things are going to happen next, there's this increase in implied volatility, especially in that front month option. So if you think about it, in a calendar spread, you're buying the more stable option, the back month option, and you're selling that front month option when you do that calendar spread. So if the front month option is extra expensive and you're selling that, you're basically getting this calendar spread at a discount. And then when you sell it back, once there's confidence in that front month option drops in price, you're going to get more for it on the back end. So I know just try it out in your paper trading log, try it out in your simulator, see how it plays out. We'll report next week. I wrote it down. We're going to report next week. We'll do a full-on 5-minute segment on how it turned out.
For sure. And we'll go ahead and clip it for the YouTube so that we could always reference the calendar spread strategy. All right, Chris, thank you for that. Staying down south, we're going to head on over to Dallas, Texas. This is Pam, interested in Radius Recycling, ticker symbol RDUS. Never heard of this one.
Well, that's because they just recently changed their name. They were Schnitzer Steel, which has been around. That's been a steel company that's been around for, 80, 100 years. They just recently changed their name and their ticker symbol to Radius Recycling, RDUS, probably playing onto they've been miners forever. And I think their main business still is mining iron ore and all of that stuff. but they've really been growing exponentially in the recycling of steels and aluminums and things like that. So perhaps that's a future play for them because they've gone as far as renaming their company and coming up with a new ticker symbol. So RDUS. Let's see. They had a top end of day reversal signal on December 28th, and they got that follow through the next day, December 29th. So that would have been a great time to short symbols of radius, or you could use a substitute back month, deep in the money, far out in time put option, which basically is going to move dollar for dollar with the stock in an inverse way. So if the stock goes down, that put option is going to go up. Either one of those, the shorted stock or the back month, deep in the money, far out in time put option, will act as a covering position for what's going to happen next, which is when this thing bottoms, you'd be able to then sell put premium and buy protective calls that you can roll out, create an income trade out of it. If you missed that, that would have been 2 or 3 weeks ago that signal came. If you missed it, you missed it. And so what you're looking for now is an opportunity to do the opposite trade, which is when this gives us the end of day bottom signal with next day trading platform, you'd start buying the stock or buying the substitute call option. And that's coming up. And so I would just hold your horses, wait for the signal with the next day follow through, and then be prepared to buy stock or buy some of that back month, deep in the money, far out in time call option as a substitute.
All right. Thanks for that, Pam. It's interesting how we're hitting all-time highs with the major indexes, and then we go into some of these individual names and we're seeing these pullbacks.
Yeah.
I think that's a bigger story as to what's really driving the overall market. Is it these big names or a few of these small names? So that's something we should keep an eye on. All right, we're staying on the West Coast. We're gonna head on over to Reno, Nevada. This is Mike, and it makes sense why he's asking about this. He wants to know your take on Wynn Resorts, ticker symbol WNN, casino conglomerate, right? They own a couple different hotels.
Yeah. Steve Wynn, right? Or did he sell out? I'm not sure if he's still even.
Yeah, I'm pretty sure he's still the guy.
He's still the guy. I'm looking at this. First of all, Wynn Resorts has been a candidate that I have traded for years since it went public. So I like using option strategies on Wynn Resorts. And my tips on a general perspective is be prepared to trade all different strategies on Wynn Resorts, not just one or two. So be prepared to profit on time passing by, be prepared to profit on directional moves, be prepared to profit on earnings plays and things like that. Looking here, I see that we got a really nice buy signal or go long signal on the underlying symbol December 8th, and we got follow through December 11th. We had a couple of fake outs, and then we had a sell or go short signal on January 10th, but I don't see that we got follow through until January 17th. And then if you would have followed through on that signal on January 17th, you maybe would have white knuckled it yesterday because then it quickly reversed on you. But I think, I love the end of day and then follow through signal combo because you just got to trust it, right? Yes, yesterday you would have said, did I make a mistake? Make sure you have your stop loss in place. Make sure, you're protecting yourself with risk. But look, today it's reaffirming that you did everything right. So when you trade with a trade plan and you have the discipline and you put all your risk stops in place, you don't have to worry. You only trade what you predict that, is in your appetite for loss, and you follow your trade plan. Don't get wrapped around the axle. So long as you've thought out your trade plan in advance and you're trading your plan exactly as you thought it out, there's no fear, right? You're never going to lose more than you expected you would lose. And the only potential is to the top side. So, yeah, if you're worried that you got in by mistake on Wednesday, I wouldn't. I'm glad that you probably shorted the stock. Or if you've been following this a while and you sold your premium, don't be bummed about that. Don't be bummed about reacting to that signal. It looks like this Wynn Resorts is going to do exactly what you did. You got to play the long game. And when you get your next signal or when you get your option expiration, take your profits, run, and roll out your next trade. Just follow your trade plan. Plan your trade your plan. I think you're on the right path. Don't get discouraged.
All right. Thank you for that, Mike. Definitely got to have the portfolio to utilize some of the strategies and Wynn, sitting at about $92 a share.
Yeah, it's an expensive one.
But, that's why you continue to do this in the long game, so that you can build up that portfolio and get into names that you might not have been able to in the past. All right. That was our speed round. So we did have a late start to the show. We're going to be wrapping it up a little shorter than we usually do today as well. I do have one final question, maybe a wrap up. Because we're now January 19th, and we're going to be in the January 20 next. Is earnings something that's going to start to have an effect on either the overall market, our strategies? Is that on the horizon for everybody?
Yeah, I think earnings. Remember, we were talking in the beginning of this show about the S&P 500 and how it's confused, and we're seeing the longer that we stay in this uncertainty phase, I mentioned that any little tidbit of news could set us off, right? And so I feel like earnings is going to be those tidbits of news that could cause buying and selling that otherwise we wouldn't do when we were more level-headed. So I'm going to be looking at earnings because all the economic news coming in is it's like a nothing burger. It's not telling us anything. So investors are going to be looking at everything to figure out or get an idea whether they should be buying or selling. And I feel like this time around, earnings is going to be more emphasized than usual. So we're going to be watching them here too.
All right. And with that, if you've enjoyed the broadcast, please hit that follow, hit that like, hit that subscribe button, hit the retweet button if you're on X. We do appreciate it. If you have some more questions, feel free to send us a DM. Leave a comment in the chat. I see Vlad asked about what auto trading platform you're using. Maybe we could cover that a little bit more detail next week with
Sure.
how to do automated trading, how to incorporate some of the ways that you use it.
Sure.
So Vlad, instead of giving you a short-winded answer, we'll go ahead and revisit it with some more details. Otherwise, send the team an email and we can give you some quicker answers. And with that, folks, we hope everybody stays warm, stays safe, and enjoys the weekend. We'll catch you guys next week.
Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.